Stephen Fiorillo. We're here for the third time, quarterly report we're covering. Super excited to have you. Really appreciate it. You've been on the SoFi Weekly a couple times. If you guys aren't watching that, make sure you guys go check that out. Stephen was paying attention for the most part, playing maybe
I
a
was
little
paying
bit of
attention, but you guys were talking very intellectually. I enjoyed listening. So, I let you guys talk and I was farming.
farming. Farming how? Farming how, Stephen? Explain that.
Herbalism, World of Warcraft.
Glad
Back
to
in the
have you.
game.
Yeah, very prolific seeking alpha writer on his spare time during the SoFi Weekly. We only have him for 1 hour, but he can't stop his addiction. He's playing World of Warcraft. I'm sure he's doing it right now. I can see the way you're looking over. Are you playing World of Warcraft? He can't be stopped. He can't be stopped. We're gonna have half his attention.
I forgot that you can see the reflection.
I can't see your reflection. You're just always darting your eyes
No,
over.
you can see the reflection in the glasses.
I don't see World of Warcraft. I see the screen is on. I don't see.
Okay.
But that's funny. Regardless, I appreciate you being here. I think we're gonna have a lot of fun already. SoFi Q1. You've been covering it a little bit on Seeking Alpha. You recently just posted an article about. Actually, both you and I have spoken about this publicly. SoFi's latest webcast. I'd love to know some of your opinions. What did you think, first of all, Q1? What do you think we should cover first? What do you think is the most important part of the Q1 earnings results?
I don't know if there's a most important. There's a lot of important things. And I think the fireside chat is more important than the Q1 earnings in a way, because we can't shake people misinterpreting and not doing the research into the company and not taking the CEO and the CFO at face value. And one of the big things that brought the sentiment down, in my opinion, was there was a lot of rhetoric around SoFi not being able to sell loans. And that's not the case. SoFi is in the business of generating revenue and profits for shareholders. They're in the business of growing their company. They do not have to sell loans if they do not want to sell loans. If they feel that they are better serving shareholders by holding the loans for investment, they are well within their right to do that. And Anthony Noto did a tremendous job on the fireside chat. We've talked about this, and he decimated the bear case. Absolutely decimated it in every which way.
Simply by saying that they are making more on a spread by holding their loans at 6% rather than selling it at 4%?
Yeah, he gave the secret sauce away. He went into the underwriting process in great length. And I listen to all of the fireside chats that he does. I try to catch every interview that he does. And I've never heard him go that in depth about it. And I think he did it on purpose because of the analysts that downgraded the stock and people indicating that SoFi would be in trouble because of delinquencies and people not being able to pay back the loans. I, for one, and I do a lot of due diligence on SoFi. Yeah. I did not know that they only give personal loans to 30% of the people that apply. I didn't know that.
I'm going to toot my own horn and say that I did, because that was brought up during the Pagaya purchase. But yeah, no, it's true.
Yeah, and I also did not know that a portion of the people that got turned away, because if you don't have a 680, it does not FICO, it does not matter what your cash to debt ratio is, cash flow to debt ratio. It's an automatic no, but they're still able to monetize through their partners, because if you have a good credit profile, they will send the referral to one of their partners and they're still able to monetize it. I did not know that either. Because I've never heard them say that. So I think it was very important. And I think the Mad Money interview was probably more important because not many people listen to the Fireside Chat. A lot of people don't even know these conferences happen. But like Jim Cramer, dislike Jim Cramer, I've always said that it is very important for CEOs to go on that show and have a conversation with Jim Cramer because it is widely watched, regardless of how you feel about him or the show.
How many people do you think watch that show? I don't follow it often.
I don't know, but with the clips on YouTube and the actual show, I would think it's a fair amount of people in the retail investment space, at least.
Right. And they have like over 1 million subscribers and everything, right? And SoFi's is, or Anthony Nota's made an appearance a handful of times now.
Yeah.
So I guarantee it helps for sure.
Yeah, I think it helps for just from a clarification standpoint. And, you know, I see it in the comments of my articles and I decide not to reply to anybody this time. I normally never do that. I did it once before on a Tesla article because I didn't want to. There was over 3,000 comments. People got really crazy with it. But
wow,
there was somebody on this SoFi article that really rubbed me the wrong way. And I'm going to make the statement again that if they want to message me on Seeking Alpha, we can see if I'm correct or not. I'm willing to do something for charity, where if I lose, I'll donate to the charity of their choice. And if they lose, they have to donate to the charity of my choice. So they can message me. I use my real name. I'm not hiding.
yeah.
I said I think it's going to be a $10 stock by 2024. I could 100% be wrong. But when they say that they will be GAAP profitable by, not in, the word is by Q4, that means that they will reach GAAP profitability some point in Q3 at the very latest.
Right.
Okay. We also have student loans probably coming back in August. Now, I'm not putting much stock into that because who knows, but I think it's going to be a lot harder to extend it again, only because the moratorium's over at this point. You know, the emergency's over. I don't see how you can extend the moratorium when the pandemic is officially over now.
Yeah, Department of Education is saying they want to start payments up again. But like you said, anything can happen. I mean,
anything can happen. I'm
they've
not
said final
baking it in.
extension multiple times, so I get where you're coming from.
I'm not baking it in. I'm not getting excited over it. But if it comes back, and let's think about the timeline. August is the 8th month in the year. It's the second month in Q3. So could be could set up very interestingly for Q4.
Yeah.
Because we'll get commentary in November about what the ramp up looks like because you'll have had it for at least 5 weeks in that quarter. And then they always report a couple of weeks after the quarter ends, actually like a month or so. So you'll have the 5 weeks in the ramp up, and then you'll have part of Q4 that they'll probably discuss on the earnings call. So there could be some catalysts this year that may get it back to 10. I don't know if it's going to, but I think it's a good probability.
Yeah. Well, I mean, I want to touch on so many things, and we don't have a lot of time. Obviously, I wanted to do this show and then also do another short little tidbit as well. I wanted to talk about PayPal, and I know that you want to cover NVIDIA as well. And we're going to do that for the members only chat. So if you guys want to, you can click the join button down below. But
I promise you the NVIDIA thing is going to be an interesting discussion.
Yeah, no, Steven's coming with some heat, so he's not so excited. I've been a bull for a very long time. It'll be a fun discussion, but let me quickly bring this over. Let's stay on SoFi for a little bit.
Yeah, can we talk about the tech platform?
Sorry,
can we talk about the tech platform?
Let's do it.
And how big of an opportunity this is going to be.
Okay, the tech platform last quarter actually went down by 5 million users. They lost their second largest client current, but Steven is not scared. Steven, tell me why.
So the banking system is archaic, and I'll give you a link that you can put in the description notes for people to go and do some research if they want. But I'm not a personal banker. I'm not in the banking industry. Everything I am going to say, I have read from doing research, and the majority of the banking systems are antiquated. They were built in the 70s, and it's a band-aid after band-aid after band-aid. And I believe 80% of those systems have to be replaced in the next couple of years. I believe by 2027, because they're just not able to produce the products and services that their clients want, because banking is much different. In the 70s, they built a system pre-internet, pre-computers, and then they kept updating. And you think about banking in the 80s and 90s. You went to a physical branch, there was no smartphones, there was no apps, there were no computers, there was no online banking, there wasn't even ATMs. ATMs just started getting popular in the mid 90s. And it was a lot more difficult to do your banking. It was very hard to move money around. You couldn't just open an account somewhere and wire money so easily the way you can now, or send it cross platform. There was no Zelle or anything. Yeah. Today is a much different world of banking. And for banks to compete in this environment, they have to be able to move and pivot on a dime. And a lot of these legacy banking companies are not in a position to do that. And
right. So
the big thing with SoFi is a legit bank. Per the OCC, they have a national banking charter, legit bank. They have done what I have not found another company that owns the entire back end the way that SoFi does.
And no one else has either.
Yeah. And that's not me being biased. I've tried to blow up my own thesis on this numerous times. I can't find somebody that owns the back end the way that they do, because they own the cyberbank platform, they own the payment rails, and they have everything backed by the bank charter.
We own third-party processing, not payment rails, though. But yes,
third-party. That's what I mean by payment rails. Third-party processing, all the processing through Galileo. Mm-hmm. So we have the trifecta, and Galileo and Technisys are integrating, creating a full stack platform for SoFi's financial services. Whenever SoFi goes into a negotiation, this is what we run on our own stuff. It doesn't get to be a better statement than that. And there is a reason why about 5 weeks ago, Notos said they're in talks with a large financial institution. And then 5 weeks later at the fireside chat, we're in talks with 12.
Yeah, a dozen plus.
A dozen plus large financial institutions. And when I think large, I think regional banks and up.
Sure.
I'm not really thinking communities or thrift. Maybe the larger communities. I see New York Community Bank, even though it was a community bank, it's really a regional now because of the Flagstar acquisition. So I think regionals are talking to them, because regionals are the ones that really need to pivot. Because if they don't upgrade their services, why wouldn't somebody go to either a JP Morgan Chase, a Bank of America, or SoFi? And when you look at the younger generation, the amount of people that are going to graduate, and there's no shortage of future clients because everybody continues to have babies. The younger generation will not know life without the internet, without a smartphone in their hand. Banking to them is going to be instantaneous gratification. They want something that's seamless and frictionless.
Well, I was looking at some due diligence on PayPal and Venmo and all of these companies. The trust for digital banking, they did it by age. I think it was Pew Research Group. And they were showing the trust for digital banking per the different ages. And every single age bracket that went younger and younger and younger, people had more trust for digital banking, more need for online banking, and all the way through, all the services, everything was highly adopted by the younger and younger groups, use them more and more.
Yeah.
So if anything, this is a total addressable market, like you said, either by population or just as the cohorts continue to age, will be needed more and more, let alone regulation and all those other things that might even push it further. Sorry, continue.
Yeah. So the big thing with the technology platform is that if they get one very large client, that's a huge press release. Then you're going to get other people taking it very seriously. And then it could trickle into more of the dozen plus that they're currently talking to becoming clients. And then it could intensify. And this could be a situation where this is a winner take most situation because there may not be an AWS and then an Azure right on their heels. This could be, I'm not saying it will be, but it could be the SoFi platform, and then second place is so far behind because why would you go with somebody who doesn't have the platform on a 360-degree integration the way SoFi does? And it allows non-financial institutions to offer financial products if they want to. So that's big too.
And personally, I am a big fan of fintechs, and right now the business model has pivoted away from fintechs because there's just no space for VC money or anything along these lines to be in that space right now. But the truth is that if you look at LATAM or any of these other geographies that I've been covering since covering Nubank, the fintech space is absolutely huge, and they're covering a lot of companies that don't even have a bank charter. So you're talking about the utility of offering this to already existing banks. But I think the utility, even for fintechs like Chime, Robinhood, all of these types of companies, where we can offer them the cloud-based service, offer them the payment processing, and the sponsoring bank charter, okay, actually allowing us to host the money. There's not another offer out there. It makes the offer even better for actual chartered banks already. So I think even as the market shifts and we start to offer this to newer businesses, these types of companies like M1 Finance or anything like this, that's where I really think the offer is as well. It's just not in season right now. So we're kind of having to shift our business, but that's really where the money is too. And even before Technisys, you could see the pipeline was huge of fintechs coming in, just for that sort of service, for fintechs, for B2B. And that was just for Galileo, not including the other two companies, or not companies, but other two services that we also have to offer.
And there's two other things about that too.
Mm-hmm.
Cloud is borderless, and they're not in banking. They're not in traditional brick and mortar banking locations. So You're not just talking about a total addressable market domestically. You're talking about being able to go into Latin America, being able to go into Asia. So this could be huge. And then if that occurs, if SoFi ends up powering 10%, 20%, 30% of the banking financial institutions in the US and then grabs some domestic, what's that worth? So are they valued as a bank company, or are they valued as a technology company? Or is it a hybrid? And if it's a hybrid, does that make it more valuable because they're grabbing it from all ends? And then how are they looked at and perceived by analysts and by the investment community? I think there's a lot of things that can go right. And while there are things that can go wrong, it does not look like those things are going wrong. You have an executive management team that has done an impeccable job. And this is a situation where their largest business line got ripped out from under them, and they didn't fold. SoFi didn't go under. They built new business lines, and they pivoted, and they grew. And they basically came in where they said they were going to come in on revenue in their 2021 projections for 2023 without student loans coming back. Granted, the EBITDA was not what they thought it was going to be because they never revised that presentation. So under the assumption of student loans coming back when they originally were supposed to, they had built that model. This is I think this is going to be a very good opportunity for me because I think I'm going to see tremendous capital appreciation. But make no mistake, this could go to zero.
Mm-hmm.
I mean, no investment is impervious to market dynamics. And if it does, and I don't sell, it won't be the first time. And I'll sleep just fine at night because I am diversified.
Yeah.
So, I mean, I don't know.
No,
I
I
don't get
agree.
crazy
I
about
agree.
those things.
Even some of your highest, or even some high conviction stocks can still go wrong, right? Management
Of
can slip up.
course.
Anything can go wrong.
Of course.
But
You always have to look. My rule of thumb is don't put in where you're not willing to lose. You don't go to a
sure.
casino, or you shouldn't go to a casino and drop money on a craps table you can't afford to lose. Same thing with investing. Don't invest money you can't afford to lose.
Yeah, these aren't baseball cards, Steve, and these aren't guaranteed,
No,
investment returns.
those
Come on.
are alternative investments, my friend. And we can
Let's
do a
let
whole segment for that because that is alternative investments. There's a
Steven wants to create
whole
like the SoFi weekly of the baseball card trading market, but
the amount of no. The amount of content out there and what Sports Card Investor built, he built market movers. You
yeah,
should look at this. It's a full analytic program, subscription model. It's crazy. I mean, what is going on? I actually tried building a eBay platform for sports cards where you have fractional ownership and shares of the card trades on an open market. You can IP. So if you want, let's
dude.
not.
I shouldn't have said anything.
Good to brought up.
Yeah,
I can send you the business plan.
that's hilarious.
And then after I wrote the freaking business plan, somebody sent to me another company that did a variation of what I wanted to do. And I was very
Sure.
upset.
That always happens.
Always
But
happens.
back to SoFi not being a guaranteed bet. I did want to add, even though they have, an extremely strong pipeline, what they said, the strongest pipeline of Galileo or new Galileo clients that Anthony Noto has ever seen since he's been in the company, and the highest total contractual value they've ever seen in a Galileo's history. Those are just pipelines, right? Those are just leads. They're not actual customers until they sign the papers. So, so not guaranteed, but it does look good.
And look, they're over 5 million members. So they wouldn't have over 5 million members. Think about all the banking options out there if people weren't happy with the product. And I keep saying this. People are not leaving SoFi to go somewhere else to get a better interest rate. You're not getting a better interest rate at one of the big money centers. I use one of the big money centers. I use two of them. Interest rate sucks.
Yeah. Yeah, there are alternatives. M1 Finance, I think, is offering 5% now. Robinhood's offering 4.65, but those are premium options. You got to pay for them.
And they're not banks.
It's true.
Robinhood isn't a bank. I'm not saying your money's not FDIC insured. I'm just saying they're not a bank. Mm-hmm. So yes, they're all you can put your money in a CD. You can put it in treasury bills. You can go to M1 or Robinhood. No knock on them. But if you want to set up your direct deposit and you want to get a large interest rate, SoFi is the game in town.
Yeah. I wanted to show you this statistic because you always talk about it's one of your big sayings. The larger the company gets, they can't hold up these larger and larger growth rates because that's just gets harder and harder to keep up those growth rates. Doesn't that sound like a Steven quote?
Well, but it's the truth.
No, I know. I'm not saying it isn't. Let me just throw us down here. If we look at the financial services on the left here, that would reign true, right? Although the growth has still been great every quarter, the actual growth rates has dramatically decreased, since we first started getting into the financial services products, which is fine. It's normal. It's healthy. But if we were to actually look over, and I don't know if I can pivot our cameras to the other side. Let me just see if I can just do this for now. So you can see on the lending side of things, lending products, look how crazy this is, Steven. that the year-over-year growth for lending products has actually, by a percentage basis, still like climbed for the most part, and then has actually held steady at 24% quarter over quarter for the last couple of quarters.
Yeah, it's very strong, and their personal loan book continues to grow. I mean, their originations on personal loans are phenomenal.
Right. Right. And that is still to this day by far our most profitable product. And by nature, unsecured loans are not the safest. So that's why people get a little bit scared. But so far, SoFi has created this algorithm where they're able to grab some very trustworthy clients even in bad markets, and still to this day, a lot of bears are suspecting a downfall from SoFi, and quarter after quarter, it just doesn't seem to be happening. We're getting closer and closer to profitability and keeping, the actual default rates way below their threshold. Right now, I think they're assuming about a 3% average life of loan losses, when really they actually suspect that they can do about 7 to 8%. That's what they want to keep their thresholds under.
Yeah, and
So
I believe they're building in 4.7 or 4.9% when they report.
yeah, I think this quarter was 4.6% for their
Yeah.
personal loans as a default rate, which is way below what we were seeing before, or sorry, way below what we're actually even seeing regardless.
Look, the lending market's always going to be there. And it's a matter of how good your actuarial and underwriting process is. It's not like this is some new development that SoFi just made up to generate money.
Right.
Every bank does it. It is normal banking practices. It's just a matter if your internal team is good enough to mitigate risk. That's all it comes down to. And what we heard at the fireside chat, my opinion is it put my mind even further at ease because they went through the underwriting process, and I did not realize how stringent it was.
Yeah. Well, that too, right? They even said that they use a lot of I was looking into the Moody's S3 forecast, and it was like one of their most conservative projections that they do. It was like the 90th or 95th percentile or something like this of how conservative that they'll actually look at the market. And it's pretty exciting that way. Like if that's where you're benchmarking it off of, and you're beating those thresholds, you're doing pretty well. Like you're keeping things very safe. They tighten their credit standards this year. My apologies. And I don't know. I don't think that this is this crazy growth SPAC that people are seeming to think that or want it to be. Right. This is a bank. They're a bank with growth numbers, with fintech style growth rates, and it's making this beautiful combination of what is potentially a dangerous situation right now, or I would even say a couple of quarters ago, I think we're already starting to leave that dangerous area of over 70% of revenue actually being a part of the lending segment. Well, now financial services has 4x'd over the past year. So it's taking a much larger piece of the pie. That's going to continue to grow, hopefully at that similar rate, take more of the pie from lending, diversify our revenues. And then also, let me hear your thoughts about this. A lot of that revenue of around 70% of our revenue coming from lending is mainly personal loans. That doesn't factor in student loans coming back, or even timed also very well, Wyndham Capital, their home loan provider that they had just purchased. What do you think that this does to the diversification of SoFi, and how do you feel about all that?
Look, it's great. And let's get into the macro for a sec.
Yeah.
I said it the other day. I don't believe the Fed's going to cut. They were behind the 8 ball the entire time. We're transitory. I cannot say that word enough because they screwed up. They were behind the 8 ball on every facet of this. They are not going to risk cutting rates and having inflation trickle up. It's not happening. Maybe we get one rate cut at the end of the year if things fall into place well. But we looked at that 25-year chart, and there was not a single time in the past 25 years, the past 3 times that rates went up, there was at least a 6 to 12-month period from when they paused that they held rates steady to see what was going on and let the data catch up. So I'm not bullish on the Fed cutting rates in 2023, but the Fed dot plot does show rates cutting in 2024. So by the time that Wyndham is integrated, you'll have more buying and selling on the home front, more loan originations with mortgages, because who in their right mind is, unless you have to move for work or because you're retiring and you want to move to a better climate or a less expensive place if you live in a state like New York or California or Jersey.
Sure.
But why would you get out of a 3% or 3.5% mortgage and go into a 6.5%, 7% mortgage if you don't have to?
Mm-hmm.
When the Fed starts cutting and rates start coming back down, when you see rates back in the 4 and 5% range, I think you're going to see a lot of activity. And that's going to come on the heels of student loans coming back, probably. We'll see. I'm not believing that they're going to come back this year, but theoretically they should. But what does that set up for 2024 and 2025? So let's say the Fed starts cutting early 2024 or mid 2024. So then by the back half of 2024, you have mortgage rates falling, you have student loans embedded again, and you have personal loans that are firing on all cylinders. So now you have all three of them doing well and not one holding up the other two. So this is an area where you could see a tremendous amount of growth 2024, 2025.
Yeah. Yep. And it seems like it's a long ways away, but the truth is that markets are forward looking, maybe not
We're
as
halfway
forward.
through 2023.
No, I agree. But a lot of people look for short-term gain. I'm with you. I've been investing for a while,
Well,
right?
what have I said? I sound like a broken record like this. Investing is not a short-term game. Too many people try to swing trade or try to day trade. If they can make money like that, fine. Good for them. I don't do it because I drive myself nuts.
Right.
I know myself better. If I did that, I would lock myself in a room. I would stare at a screen all day and I would never come out. Like I can't do that. I will drive myself nuts. It's a lot harder to do than what people think. And, investments for me are 5 to 10 years. Now, if something happens that makes me change my investment thesis, I'm going to take a good hard look at it and maybe cut it out. I had to do that with Intel. My investment thesis changed on Intel, not the long-term viability or play. It was the reason I was invested because I had it in the dividend portfolio. And I think that what they did, they had to do. And I think it's good for the company long-term. But from a dividend perspective, it no longer fit my dividend thesis for holding it in that portfolio. So I got rid of it.
Yeah. I wanted to touch on really quickly before we left the Wyndham Capital conversation. There's a statistic you maybe or maybe missed, or I don't know, but they don't talk about it very often. This is a very small point. But during the home loan conversation, sometimes Anthony Noto has brought up that is like their highest cross-sold product ever, and that they don't actually reach out to many members to many outside individuals to offer them home loans. And so about 70% of the people that get a SoFi home loan are existing members. So
yeah, I've seen that. And it's a great thing. And, let's give Chris Patel some credit because he said something that's very important. You think about how sticky SoFi is becoming. You think about when you have your direct deposit there and then you start putting money into their ETFs that have no management fee, I believe, if you're a SoFi member. This becomes a very sticky platform that is frictionless. And then you start getting into the loans and mortgages and all the other aspects. I mean, this is a full 360 platform that is what the younger generation is looking for. And I'm looking at this from the younger generation, not people my age, not people older than me, but people who do not know life other than instant gratification.
Right.
Right?
Well,
That's the big thing people need to realize.
yeah, no, but I think over the course of this year, I think we might have to wait. Like, I'm honestly expecting SoFi stock to stay where it is for the remainder of 2023, for the most part.
Okay.
Come Q3, Q4, or sorry, I shouldn't say like the whole year, but come Q4, I think that this stock is going to change drastically once gap profitability happens. Also with that, student loans should be back up for the most part. Home loans should be firing. A lot of, and now this is the same rhetoric that we've had in previous years, right? This won't be the final, or this hasn't been the final extension. This is like the fourth final extension that they've done of the last 7, right? So
yeah, that's why I'm not jumping up and down right now. This is a situation, I'll believe it when I see it.
Yeah.
And look, my $10 by 2024 premise is based on student loans coming back. I'm not buying it that they are going to, but if they do, I think that's enough of a.
Are you putting it on there's a higher likely chance that they're not coming back?
No, I'm agnostic to it. I'm 50-50. Like, I just
playing it conservative.
I'm not taking it at face value because they've been pushed back so much. I just think it's a little harder to extend them now because they classified the pandemic as being over.
Yeah.
But anything can happen. You don't know.
No, I agree. I just the latest call with Miguel Cardona kind of made me think that he said that they are getting ready for payments resuming. He never said that in any of the final any of the other final extensions. Like, I really do think it's coming. Then again, I've been wrong, right? I didn't think that they were going to extend it, but like you said, a lot of things have changed. The emergency has ended.
Look, I don't want to get into a political conversation, but you have an election year coming up. You don't know what they're going to do.
I agree.
For optics, I mean, who knows?
I agree.
It's a wild card. So if student loans don't come back, I don't think SoFi is going to appreciate as quickly as my $10 by 2024 cases. But if student loans come back, I think that's a big enough catalyst to get analysts talking. And then, depending on what's said on the Q3 earnings call in November and insight into end year results, if you get some increases on guidance, I mean, think about it. What did they increase guidance 3 times last year, if I'm not mistaken?
SoFi?
Yeah.
Yeah, I think about 3. I know they cut it one time.
They cut it in the beginning, and then before
and then raised it.
They raised each quarter.
Yeah.
So you could get a triple beat in Q2. They could beat on the top line, beat on adjusted EBITDA, and they could raise guidance. And then if student loans come back, they're probably going to raise guidance on Q3. So there's catalysts that get it there. But you know what? If it doesn't get there, fine. I got all the time in the world.
I wanted to talk about a couple other things. One, stock-based compensation. Love to hear your remarks on that. It's been going down both in absolute terms and as a percentage of revenue. How important is that to you? Dilution for your own shares. And then secondly, I also want to talk about, and why don't we start with this one, then we'll go on to stock-based compensation. But Chris Patel, you brought up his name, a critic of SoFi, then becoming a investor, and then actually a customer, a direct deposit customer, the highest regard of a customer that we could ever want. Even applied for a personal loan and got rejected, which is, exactly what we want to see as SoFi investors, is knowing that it's not, they're not lending it out to anyone. They're really stringent.
Well, let's be clear. We don't know what he filled out or how he filled it out or anything. Amit did say he filled it out a little shaky to see what would come back. So let's be very clear. Chris would have to explain what he did. My understanding is it was a test run to see what would get through, what wouldn't get through. But I haven't talked to him about it, so I have no idea.
Okay, I just went off his comment where he said that
Yeah.
he was making over six figures or something and had a credit score of 816 or something like this and still got declined. But maybe there was some other stuff that he put down that was shady. And I know that they're not big fans of the self-employment income and these sorts of things. Um, so, and maybe you can show us some slides on this. Uh, how much, whenever people are actually starting to use SoFi's platform, are they sticky customers? Are they using it more and more? I know that you like to look at like deposits per member or any of these sort of statistics to show us like, are the people on this platform actually staying and are they growing the relationship with SoFi? Maybe that can just give us a little bit more information. Maybe you have something for us.
Yeah. Can you push it through? All right.
Can I just to make it bigger, I'm going to
Yeah,
put this in the
so
corner here.
that's better. So let's just start with the loans real quick. We won't spend a lot of time on this because we really beat that drum. But you look at top left, total originations over the three business lines. Green line is total originations. The red line or burgundy line is personal loan.
Right.
Personal loan has become,
Look at that, eh?
I mean, it's become like 85% of their loan book right now in Q1 2023 because of how strong it is. Now, student loans was predominantly, and I only have the data going back to Q1 2020 because of their earnings reports,
Right.
but that was their bread and butter. That was their biggest loan segment. Dropped off. You got pickup in Q4 2021 because it looked like their loans are going to come back. People started refining, and then they dropped off a cliff again. What happens when they come back and personal loans continues to go up, or even if personal loans stays where it is, and you get student loans to go up on originations, and then when the rates start getting cut, mortgages start growing. This is going to be a very big business line.
Yeah. It's I don't know. It's looking at this business with all cylinders firing seems like a very, very massive player in this space. And the fact
Yeah,
that no one's
that's
giving
something we haven't seen yet, too. Remember that we have not seen all cylinders firing together.
with a bank charter, ever since
Yeah,
being a public company, the student loans were slashed and we were able to pivot, which I even spoke about with Nubank one time, but like the ability to have a business model that has one amazing large product like student loans, and then their ability to pivot to a second product line that's actually larger than their first product line is like a massive indicator for success in a business. And SoFi is a massive candidate for that.
yeah. Well, let's not forget, something has always gone wrong.
Right.
From
Massively wrong. Not even a
from an
little bit wrong.
yeah, from an outside factor. And I'm not talking about internally. Stuff that they have no control over. Something has always gone wrong. Pandemic, moratorium, interest rates going up. Something's always gone wrong.
Yeah.
Yet this is a company that continues to innovate, continues to pivot, continues to grow its top and bottom line with something always going wrong. What happens when something actually goes right other than getting the bank charter?
Yeah. Yeah. Well, I mean, even that was delayed
Yeah,
multiple months. I
yeah.
think it was held back a total of like a year. Um, it this is Anthony Noto putting out fire after fire. like, uh, if we actually do get a tailwind, which I would probably say was COVID, just in general, a pivot to digital banking, like you can't say that SoFi didn't benefit from this, right? People weren't able to visit their branch banking as easily, and so online banking exploded. But
But
that
what
being
do you
said,
need to go to a physical branch for these days? Like, what do you really need to go to a bank for?
if I was to be very objective, I mean,
There's only two things I can think of.
uh, cash deposits, and a lot of people don't like to do the nearby ATMs at ATM partnerships and stuff like this. And now I heard with SoFi checking and savings that there's actually a fee structure versus like SoFi Money didn't have any fees for depositing cash, but SoFi checking and savings since them having a bank has changed. I think that was one of the big flaws that people were saying on the Reddit, but I could be wrong. I'm not actually a member. So
Yeah,
that's because I'm a Canadian, by the way, not because I don't want to be a SoFi member, but yeah.
so the only reason I can think of going to an actual bank is getting a cashier's check.
Right.
If you need to get a cashier's check right away, you would go to a branch. Cash deposits, but cash deposits, you can go to any ATM at this point if you really need to. So the cashier's check's the big thing for me about why you would actually need to go to a physical branch.
Yeah, and like there's been some like Amit as well has he's still with Bank of America. He doesn't want to pivot because he has business accounts and stuff like this that he wants to
And
have.
what happens when we get into business?
That's
What
what I'm
happens
saying.
then?
Mm-hmm.
And
Right.
I'm a little surprised that SoFi has not gone into business accounts yet.
You know what? I think it's smart. You know what? They are going after 100 different business lines right now. That's a whole other category. I do think that they will get into it, but I'm sure it'll probably be a 2025 sort of timeline. That's when I suspect that'll come out. It'll be like I don't think it'll be that far away, but I think that we're gonna have 10 million members before we do something like that. And then that, I mean, there are some. This is just this is speculation. Okay, it's just what I assume. I know that Anthony Noto has said things like they want to make sure that they make regulators happy before they start stepping into new business lines, stuff like that. So I think it'll be a couple of years under their belt as being a bank. And right now, what they're a year and 4 months, a year and 5 months roughly of being a bank so far. Give them a couple of years. You know what I mean? The
Yeah.
Fed and the OCC, they're still only conditionally approved. They're not even fully approved as a bank charter yet. So who knows? They might have to wait a little bit. But whenever that happens, there's a lot of people like Amit that not only bring over their own personal savings and everything like this, but also their additional business accounts, which I'm sure will be a better offering than what Bank of America and all these people are charging, with large account fees and things like this. So then Amit can run his business. But
Yeah.
do you want to say anything on that, or do you want to jump back into the spreadsheet?
Go back go back to the spreadsheet. Let's look at. We're talking about the bank. I'm on the deposit slide on the right. So they were a bank for roughly 5 weeks in Q1, and they've grown in 1 year by roughly $9.5 billion, $9 billion in deposits. I mean, this is not a fluke. A fluke is getting to 2.7 billion in Q2 and then it going down. That's a fluke, not quarter over quarter growth.
Yeah.
That's replicable. It's not a fluke. And we know that they're planning on growing this quarter by at least 2 billion is what it looked like from what they were saying. And then the big thing is the average member deposit has grown every quarter.
Yeah, that's crazy. That's crazy. Because they are direct deposit clients, right? Like the longer that they're going to be with us, not only increases, the total amount of money that they're pouring into our thing, but it also what people never talk about or nearly enough is that direct deposit clients, if you consider them primary bank, like having a primary banking relationship with SoFi, okay, where are they going to pay their bills? Where, like, if all your money is starting to pour into this bank, that also means that all of your spend is at this bank too.
It becomes very sticky. There's a good chance you get a credit card from them.
Right.
It becomes very, very sticky.
Right. We get all the interchange fees from from them on paying all their bills, from getting a credit card. You might as well set up an invest product or an invest account. So then like the SoFi checking and savings is the center of the cross-sell sort of branch, right? It's the center of the tree and then all the branches to all of our other products. It's amazing.
As many direct deposits as possible. Because look at me. I would love to move everything over to SoFi. My wife is the boss. And she does all the bills. She pays all the bills. So I'm not going to mess with her system.
Right.
And, our life is embedded with a different company. If we were just starting out, it wouldn't even be a question. Everything would be through SoFi.
Steven, that's what Chris said the other day. And then Michael Rowland said, you know what, you got to make the jump. It might be a day or two of difficulty to switch over all your payees and everything like this, but it might be worth it to start making the 4.2% in your savings account.
I'm not saying it wouldn't be worth it. What I'm saying is my wife is the boss and she pays all the bills. So I'm not going to mess with her system.
Right. Fair enough.
She does all of it.
I'm just trying to help your investments. I mean, you got good money in SoFi.
Listen, we
support the companies you own.
I try to. I opened up a SoFi membership.
Yeah. Is that it?
I
was expecting a list of things, and then
I want to do the bank deposits.
Okay.
In quarter over quarter.
Yeah.
Q4 2022, Q1 2023. SoFi was the 5th largest winner by actual numerical amount. From a percentage, they were the 2nd largest winner. I don't care about the percentage. I care about the numerical value.
I don't. I mean, you're comparing against companies with.
But think about why I say that. I say that in this quarter because what was this quarter?
What do you mean?
Think about it. Everything started in March, right?
Yeah.
So Silicon Valley bullshit.
Okay.
Look at the outflows.
Yeah.
That's what I care about. We didn't see outflows. And I'm going to be even more curious to see what the numbers are quarter over quarter, Q1 to Q2, and where the outflows lie and where the inflows lie. That's why I'm saying I don't really care about the percentage increase right now. I care about the numerical because of the amount of outflows that we were seeing in the retail sector. And that was a big bear case that SoFi was going to lose money. I got news for everybody. People aren't leaving SoFi to go somewhere else because of the interest rate they're getting.
Yeah. Yeah. And honestly, though, I think it's like that's even not even too like a crazy fair comparison, because you think about all the members that someone like a JP Morgan or a Capital One have, and then you go, well, they haven't gained as many deposits as Capital One. It's like, oh, it's Capital One. Like we're brand new. We got 5 million members. This is crazy. So
yeah, and look, a lot of these places lost a significant amount of money on outflows.
Right. Yeah, no, and the truth is we're really, we're attracting a very affluent client. So honestly, I'd like to see once SoFi actually matures, what is the average deposit for our user base versus other banks of similar user counts. I'm sure it's much higher.
I mean, I think we could probably figure that out if we look through the 10K on JP Morgan and try to figure out if they list how many people use their bank, just divide that by deposits. That's your average deposit.
Well, I agree.
I know it's not cut and dry as that, but it can give you somewhat of an idea.
I just think the rate at which our deposits are growing, it's like we still haven't found a rate in which we're finding like the bank is just too young to sort of see where people are holding their deposits at. But
think about this. It's like you just said, they're young. They're in their infancy. If SoFi makes it a decade or 2 decades, how big does this become?
Yeah. Yep. No, I agree. And that's why maybe you can sort of tell us what are your price targets for SoFi, either for the end of the year or potentially 10 years from now?
I mean, it's not going to change from what I said before.
But not everyone has heard that one. So you gotta repeat it for the new viewers.
Look, I think it's going to be, I think SoFi has the potential to hit $10 sometime before January 2024.
Sure.
And by January 2033, not 23, because that would be in the past, in 1 decade from now, I think that SoFi has the potential to become a $100 billion company. Now, I could be 100% wrong, but that would be a 20x.
Yeah. Yeah.
So if you put that on a share price, was that like 104, 106 bucks?
Mm-hmm. Yeah.
So it may not happen, but if the tech side plays out the way that it has the potential to, and I am going to bring up the numbers, so bear with me because this is a very important thing.
And there's a lot of things that could distract from that. Like they might not be $100 billion company, but they might have distributed either, dividends to investors. Like, do you think, one, that you'll be holding this company for the next decade, and then two, and that's if the company obviously doesn't change its mission or something that you disagree with, but and two, do you think that you'll end up seeing a dividend from this company, considering it is a bank and potentially will enter a value investor standpoint at some point, or a status at some point?
Yeah, so unless something changes in my investment thesis, I plan on being a shareholder for a minimum of 5 to 10 years, if not longer. I went into
Right.
this 5 to 10 years more on the decade side, but there is a very good chance that I will be a SoFi shareholder for several decades. That doesn't mean that at a certain point I may not take my original investment out and just play with the house's money, but I can see myself being a shareholder for a very long time. And I'm also planning on adding more shares this summer and maybe even next week. So, as far as the dividend, I think in a decade from now, there could be a dividend. It's nowhere close to paying a dividend now. That's not their focus. But at some point, if they get to where Noto wants them to get to be a top 10 financial institution, you're going to have to pay a dividend to stay competitive to these other companies.
I agree. I agree.
So it's something that I think is a discussion internally with management 5 to 10 years down the road, depending on what the financials look like.
Yeah. Yeah.
But I could see it happening.
Share buybacks, dividends. It's everything that a bank loves to do, right? Especially whenever they're just printing money, which if the
Yeah.
member growth goes to 1 million new members per quarter and everything like this, and they have that growth phase, they can quickly switch the levers from uh, trying to become a profitable company and profit focused to growth focused to distribution focused. Like they could just do whatever they want, right? And the bank charter has made that so much more flexible. So it's crazy how far SoFi has come since we've been covering it already. And they are growing. That's the thing. If you look at the stock price, people can think that this is like a lagging company, but the truth is that it's like loading a spring. I think maybe you even said this, right? The more that they're
Coiled
stacking,
spring.
yeah, it's you're adding all of these financials on top of a depressed stock, and eventually, investors might not love it in this market, but eventually that will have to turn, and they will either get acquired, or the market will have to fall in love with this company if they can keep their defaults and these sorts of things under control, and the company continues to grow, and they don't do anything that hurts shareholders. I personally think it's totally feasible, and that's why I'm investing. But that's just what I'm doing with my money. Steven, before we jump over to just PayPal and NVIDIA for the next portion of this video, which only members will be able to see, please hit the join down below if you guys want to go see that video. I've also have some stock goat stuff and a whole bunch of other investors lined up, but take it away with the last comments here.
I'm trying to find the numbers. All right, I found it. All right. So when I talk about Bank of the Future and they're geared toward the next generation, not me, this is some background on what that next generation is. So, according to Bank of America, Gen Z's income will reach 33 trillion and surpass millennials in 2031. So let's think about that. I said I think this is a $100 billion company in 2023. Gen Z's income will reach 33 trillion and surpass millennials in 2031. Since the end of 2020, Gen Z is on track to increase its income from 7 trillion to 17 trillion by 2025. I mean, that is absolutely huge. And when you think about these are the generations that are coming out of college, going into college, getting their first job, and needing mortgages, needing personal loans, needing student loans. The reoccurring cycle of clients does not end. It just doesn't end. And
Let me ask you a question. Do you think that
yeah,
these Gen Z people, whenever they are starting to set up their accounts, do you think they set it up through a digital account, or do you think they're going into the branch to set it up?
no, I think that they are, look, I am all about working smarter, not harder. I'm about efficiency.
Sure.
And I just don't think it's efficient to go to a branch. And from what I see with the younger generation, even with myself, smartphones have conditioned us to have everything at our fingertips. I think that transcends over to other habits. And I just don't see people that are 15 or 18 years old wanting anything to do with a physical branch bank.